All right, we are back for another show. So we are starting to get some economic data out from the devastation that happened in the Chinese economy since December 2019 with the coronavirus, where Wuhan was ground zero. So as you can see there on your screen, first let's talk about that. So that is from Crescat Capital. That is a hedge fund. I've interviewed Tavi Costa before. I've recommended that you can follow him on Twitter. He puts out a lot of great charts and graphs, and that is showing that the real estate investment in China has collapsed. So it is down the largest it has ever been in basically ever, according to the graph, down over 16%. So since this data was starting to be kept track of by the National Bureau of Statistics of China in 2001, this is the most drop, even more than in 2008 and 2009, as you can see there on your chart. So the thesis, the paradigm, the attitude that real estate prices never go down in China, I think that's going to change. Okay, let's talk about another news story. This story was shared by Jim Chanos on his Twitter feed. He doesn't have at Jim Chanos. It's under a Greek philosopher named Kai. I forget the name. Anyways, this article is from Jian Feng from April 9th. More than 240,000 Chinese companies declared bankruptcy in the first 2 months of 2020. All Chinese businesses, large and small, have struggled since the global pandemic emerged. I already said coronavirus. Plus, I did a China video, so this video will almost definitely be demonetized anyway. Merged at the beginning of this year, forcing stores, restaurants, and factories to cut down on hours or completely shutter. While the full economic impact of the outbreak on China's economy is still uncertain, popular business writer Wu Xiaobao detailed in a recent report that about 247,000 Chinese companies declared bankruptcy in the first 2 months of 2020. Wu Xiaobao's financial blog revealed in Chinese that Guangdong was the most impacted province, with over 30,000 firms going out of business in January and February, followed by Shandong, Jiangsu, Sichuan, and Zhejiang. The observation echoes a string of previous surveys showing many Chinese companies, especially small businesses, feeling the pinch as the pandemic brought consumer activity to a halt. Also, China's economy is dependent on exports. So the US consumer, the European consumer, other affluent consumers in other countries, not consuming as much. When you design an economy solely on exports, this is the worst case scenario right here, what's happening to China. The observation echoes a string of previous surveys showing many Chinese companies, especially small businesses, feeling the pinch as the global pandemic brought consumer activity to a halt. Almost 36% of the private-owned firms that responded to a survey conducted by Tsinghua University in February said that they were hammered by the economic fallout from the outbreak and did not expect to survive after a month. In another survey released in February, more than 60% of the small and medium-sized businesses in Shandong said that they could only hold out for a minimum of 3 months under current conditions. Unsurprisingly, Wu also noted that new companies were the most vulnerable businesses affected by the crisis. Of the companies that pulled the plug in January and February, roughly 55% were startups under 3 years old. So just bad timing, or bad business model, or both. When it comes to specific sectors, Wu says that the companies in the hospitality and retail industry have been going through a particularly rough time because people were advised to practice social distancing and avoid public places. This is in line with a report released by China Chain Store and Franchise Association about 2 months ago, which showed that retail shops in China were experiencing a 50% sales drop, with restaurants making only 30% of their normal profits. Probably worse than that. Although I hear takeout and delivery was pretty good even in Wuhan during the crisis. Other sectors that were seriously impacted by the knock-on effect of the outbreak include rental services, construction, and farming. Construction is very dependent on central planning, so economic central planning in China. While the pandemic is devastating to most companies, some businesses have been thriving in the crisis, according to business data platform Xianyancha. Xianyancha. Since February, more than 28,000 companies across China have expanded their scope to include healthcare-related services. Hopefully, it's not like a factory that's now like a healthcare company, because like all these factory owners, if you read Denny McMahon's book, excellent book, China's Great Wall of Debt, a lot of these factory owners that had no experience in construction or real estate got into construction or real estate. Hopefully it's people that have healthcare related experience. Otherwise, it could get very dicey. Healthcare related services and the manufacturing of medical equipment such as thermometers and masks. Yeah, only after China withheld a lot of the N95 masks for months. Internet-based firms have also seized the opportunity to grow as people face a new reality in which online classes and virtual meetings have become the norm. Or like what happened in Italy, where Italy was generous enough, I think 2 months ago in December, to donate a bunch of masks to China, and now China's trying to sell them back to Italy at a profit. Wu's report also notes that given the large-scale closure of government offices in January and February, a considerable number of companies in serious financial trouble were unable to file for bankruptcy. Interesting. As China slowly, so this would suggest that the data here is not fully accurate. As China slowly grinds, surprise, surprise, right? Considering how opaque China is. As China slowly grinds back into activity starting this month, with also people who are running factories and managers of factories, either the government's forcing the workers back, which is dangerous with social gathering, mass gatherings of people. That's dangerous for second wave of outbreaks, maybe. Talk about that in a minute. Starting this month, the report predicts that more bankruptcy applications will go through in the next 2 months and more companies will officially go out of business. We have one, this is from supchina.com. The link will be in the information and description section. Came out on April 9th. This article is from April 6th. Chris Martinson referenced this article in a recent video from the South China Morning Post on April 6th. Sydney Lang was the author. Coronavirus, nearly 500,000 Chinese companies closed in first quarter as pandemic batters economy. So you have one data point here that it's, 247,000 Chinese companies declared bankruptcy in the first 2 months of 2020, and then you have this other report that it was more, almost 500,000. So there's a pretty wide data range here. Obviously, we're not getting the full story. More than 460,000 Chinese firms closed permanently in the first quarter as the coronavirus pandemic pummeled the world's second largest economy, with more than half of them having operated for under 3 years. Corporate registration data shows the closures comprised of businesses whose operating licenses had been revoked, as well as those who had terminated operations themselves, and included 26,000 in the export sector. There you go, export sector. Again, China's economy was very dependent on exports. And for a while, this worked because the U.S. consumer was still consuming, the European consumer was consuming, more affluent consumers in other countries were consuming, but now discretionary income is collapsing. Because asset prices have fallen, even though the central banks and the Fed are trying to prop them up, but everyone's cash flow situation is in peril. Well, almost everyone. Okay, 26,000 in the export sector, according to Xinyancha, a commercial database that compiles public records. At the same time, the pace of new firms being established slowed significantly. From January to March, around 3.2 million businesses were set up, a 29% drop from a year earlier. Most of these new companies were in traditional centers of economic power, such as Guangdong province in southern China, and close to half of them were in distribution or retail. The number of business closures underlines the challenges facing China as it tries to revive its economy, which is at risk of a contraction in the first quarter for the first time since 1976. Quote, China has managed to get the global pandemic outbreak largely under control, and I'm laughing at this, and domestic supply disruptions have now mostly dissipated. End quote. Yao Wei and Michel Lam, economists from French Bank Societe Generale, said in a recent note, if they actually did any research instead of believing Chinese government numbers and looked at Winston Serpensa, Matt Lawai 86, ADV China, Jeffrey Landsberg of Commodore Research, or the new one that is out, which I really like. This is a really high production effort. The sister station for Epoch Times, China in Focus. So that's China in Focus-NTD. That has over 200,000 subscribers. They are releasing interviews with people inside China where their voices are distorted and translating in English. They have actual videos of boots on the ground of things in China. They are doing amazing coverage. That is a must follow on YouTube, China in Focus. And they've been reporting a lot of different anecdotal stories, along with Winston, who is Winston Sturzel, I think, from Serpensa on YouTube channel, ADV China, and Matt, and a bunch of other sources. Also, my friend who is trapped in Wuhan is sounding like they're preparing in Wuhan, even though Wuhan just opened up, partial open up, not a full open up, but partially opened up, that a lot of people want to leave Wuhan, and a lot of people inside Wuhan are worried about a second round of outbreak because the anecdotal evidence, the videos on China in Focus, the interviews, it definitely sounds like there is coronavirus outbreaks in other cities outside Wuhan in China. A number of different places. And this is because the Chinese government over the last month ordered the factories back to work. Now, some factory owners were just turning on the machines to burn electricity and pollution, but some factory owners actually brought the employees back, and that's where they're having more outbreaks. But there's remember also, China closed the movie theaters. They had planned to reopen them, and then they suddenly closed them. So within, I think, about a week, they went from planning to open all their movie theaters back up to closing them again. Okay, let me get back to the article. However, quote, however, there are also reinfection risks in South Korea too. Quote, however, there are signs of lasting damage to domestic demand, and on top of that, the external shock resulting from widespread lockdowns in other major economies is arriving fast and furious. In Dongguan, a once thriving industrial hub in the Pearl River Delta, rows of empty shops and closed factories are becoming a noticeable feature of the landscape as companies grapple with slumping international demand. Again, this is what happens when you set up the majority of your economy for exports. It goes very, very well until you have a Japan moment from about 30 years ago. In March, a local export, the U.S. benefited greatly as an export economy because all the industrial bases of all the other countries were destroyed from bombings in World War II. China did not have the same scenario. So, and now you're seeing, this story just came out. I made you a separate video on it, but Larry Kudlow is now saying that the U.S. government wants to pay the moving costs of American companies to leave China. So the same day, Japan announced that it would spend upwards of $2.2 billion to get its corporations out of China and either back home or spread throughout Southeast Asia. White House National Economic Council Director Larry Kudlow said the U.S. should print more monopoly money, I'll add that part, and, quote, pay the moving costs of every single American company that wants out of China. Quote, I would say 100% immediate expensing across the board for plant, equipment, intellectual property, structures, renovations. In other words, if we had 100% immediate expensing, we would literally pay the moving costs of American companies, Kudlow said on the Fox Business Network's America Works Together town hall, which aired on Thursday. The Japanese government announced that it would provide direct loans of 220 billion yen, or about $2 billion, for companies shifting production back to Japan, and 23.5 billion yen for those seeking to move production to other countries, according to details of the plan posted online. Kudlow told one of the people in attendance who had asked about America's over-reliance on China what could be done to change the commercial relationship post-pandemic. Kudlow said that one way was to provide them with moving cost was to provide companies that manufactured in China with moving cost payments, though he did not go into specifics. The specifics are, when you have the world reserve currency and it's digital dollars, you can make it monopoly money, you can make it rain. You can make it rain. Most U.S. companies because why not? I mean, eventually, Danielle DiMartino Booth just said on the interview, I'm being sarcastic, of course. I'm not in favor of any of this fiat currency creation. Danielle DiMartino Booth said on the interview yesterday, if you have not listened to it, she said the Fed's going to start buying stocks soon. And probably student loan debt, and wipe that eventually too. Most U.S. companies that manufacture in China do not have their own greenfield assembly line. For example, Apple has long used Foxconn, a Taiwanese multinational with massive assembly plants in mainland China. Other U.S. companies simply contract Chinese firms to do the work, whether they're making kitchen cabinets for Lowe's or pots and pans for KitchenAid. In other words, it is not a matter of putting widgets and office furniture in a pod and shipping it across the Pacific Ocean. To bring the supply chain back to the U.S. would, in most cases, require hefty capital expenditures. But hey, if the U.S. government's already printing for infrastructure and all this other stuff, may as well add it to the list. Entire new factories or additions to existing ones, yeah, billions of dollars. Also, the state and local politicians would have to waive some laws because it takes a long time for environmental permitting and all these other permits to get factories built, especially large ones here in the U.S., depending upon the city and the state. It means any profit companies, any for-profit companies, there's really bad grammar in this article, are counting Forbes, shame on you Forbes, are counting on due to lower costs in China would be erased as they shift gears out, spending millions of dollars more to do so. So they would, if the government doesn't subsidize it, they're saying that the companies that own the factories would lose too much money shifting the factories. I'll switch back to the other article now. The rest of the article will be in the information and description section. I'll switch back to the bankruptcies in China. Chinese business owners who can no longer afford to maintain operations face a number of hurdles before they walk away from a company. Oh, actually, wait. Okay, it's a paragraph above. My bad. In March, a local export-oriented manufacturer of tote bags and toys in the city Dongguan, Fantastic Toy Company, collapsed after overseas orders dried up, leaving some workers with unpaid salaries, the local labor authority said last month. The government has ordered the factory's landlord to pay the outstanding wages. Chinese business owners who can no longer afford to maintain operations face a number of hurdles before they walk away from a company. If an insolvent firm wants to cancel its company registration, it needs to go through bankruptcy procedures or show a liquidation report confirming it had no unpaid debt or other obligations. Once shareholders or creditors file for bankruptcy, it can take months for courts to accept the case, followed by a long process of verification, creditors, meetings, and asset sales, said Li Haifeng, a partner at Baker McKenzie Fenchun. Quote, I expect a surge shortly after the situation settles down. We know many enterprises are already on the verge of bankruptcy. It's just that they don't have to declare or file for bankruptcy immediately, Lee said, adding he had received many queries on the matter in recent months. Given the costly nature of bankruptcy proceedings, particularly for small businesses struggling with cash flow or without sufficient assets, the number of bankruptcy filings this year would not be high, said Zhu Bao, a Beijing-based lawyer. Fears over a growing number of companies going bust also appears to have played some part in Chinese courts rejecting and delaying bankruptcy filings, according to lawyers and official documents. Creditors who filed on behalf of suppliers that helped contain the coronavirus or companies on the brink of bankruptcy as a direct result of the pandemic usually had their claims knocked back. Dozens of court documents filed over the past 2 months showed. We know many enterprises are already on the verge of bankruptcy. It's just that they don't have to declare or file for bankruptcy immediately. Li Haifeng, the courts in these cases encourage the creditors to reconcile with the struggling firms and ride out the difficulties. This, along with disruptions to court proceedings due to virus lockdowns, helped slow the review of bankruptcies in Chinese courts to 1,770 in February and March from 2,160 filings in January, according to National Enterprise Bankruptcy Information Disclosure Platform. Quote, the delay and rejection of taking corporate bankruptcy cases is certainly intended to keep the economy going. Too many bankruptcy cases, again, bad grammar here, do not do much help to economic recovery. And that's the end of that article. That article will also be in the information and description section. Again, I cannot recommend this enough. The China in Focus YouTube channel. They have amazing production, the quality of reporters, video, production content. They have real resources backing this. As good as China Uncensored is, this has even more. As good as ADV China and Laowai 86 and Serpensa are, this has a lot more. And they have a lot of interviews with people in China and videos of what looks like the evidence of the second coronavirus outbreak all over China. Yes, please hit the like button. People are saying I should not say smash. It's too violent. So please tap the like button. Polite tap. Hit or tap. Actually, hit's violent too. Click. Click is less violent. Click or tap. Pebble Man, I'm not going to repeat what you just said to do to the like button, okay, buddy? That's all you. The Chinese Communist Party is still doing enormous amounts of propaganda inside China. The amount of xenophobia, Winston, Serpensa, and ADV China, they're covering this really, really well. The amount of xenophobia inside China towards foreigners, especially Americans, is enormous. Enormous xenophobia, enormous propaganda. And they still have most Westerners fooled, because I'm seeing tons and tons of headlines from the Western press, the mainstream media, mainstream financial media, how now more Americans are dead now than in China. And Italy. Okay, the real number, if people knew the real number in Wuhan and other parts of China in December 2019, January 2020, this wouldn't be a discussion. JB, I do not answer super chat questions for small little junior mining stocks. Thank you for the super chat, but I don't really answer. I don't cover junior mining stocks, especially that one. But I in general, I don't really cover that many juniors. Unless it's about to go into production, and even then, I don't cover a lot of them. Okay, he also sends a super chat. Would the drastic slowdown in China now and in the future cause a slowdown in global gold demand? It's possible. In my opinion, it's possible. But you still have central banks who want to buy gold. The central banks want to sell their treasuries, and the Fed stopped that with global repo. But the investor demand side for gold is enormous. So you have a little bit of a drop, probably. The industrial demand side for gold, the gold ends up being recycled if it is used, so it's not super significant. The investment demand and central bank demand for gold is really the main driver for gold demand. So it just depends. Let me just give you an example. So you have Russia right now. Russia is having some really serious budget problems because of the low oil prices. I think they just sold about 30 billion in cash of their reserves in the last month or so because they're having budget problems because of how low oil is. Now, I don't think Russia has sold any gold yet, but maybe they have to. I don't think China has sold any gold yet. We'll see. So I would monitor the situation, but as of now, the countries that have budget problems, the oil-producing countries that, like Russia, that were accumulating a lot of physical gold and a lot less, almost zero treasuries, because they had unloaded 300 billion in treasuries over the last 4 or 5 years. So now they're having budget problems. So the oil market, a lot of these oil-producing countries do like buying gold with their oil profits. So I haven't seen any evidence yet that central bank demand has collapsed for gold, but investor demand is exploding. So at the institutional level, at the hedge fund level, at the retail level, gold demand is exploding. Okay, another super chat from JB. Thoughts on the OPEC deal to cut 10 million barrels per day? JB, now that you are a Patreon account contributor, there is an extensive article behind the paywall there that said it would not, the amount of oil demand collapsing was still going to overwhelm it. You say in your super chat here it seems a paltry amount and insignificant. I would say it's not enough. But the problem is these oil-producing countries still need revenues. So they can't shut off all their oil wells. And it's dangerous to do that too. There's a version, they have to shut in the oil wells. It's not quite as cash burning as putting a mine on care and maintenance, but it is expensive to maintain the oil well before restarting it. Especially if you're in a Western country with strong environmental standards, then it's not cheap. So yes, I think the OPEC cuts, the 10 million barrel per day OPEC cuts are nowhere near, because the demand, oil demand globally, demand for gasoline, demand for jet fuel is still collapsing, and that is overwhelming any supply cuts. However, we are seeing some signs that are good in the oil market, but it's still falling knife. So the rig count is starting to finally fall, so that's good. And the oil refiners are starting to drastically reduce how much gasoline and other oil products they're producing, so that's good. Daniel, thank you for the super chat. He says China in focus tends to be 30 days ahead of mainstream news for medical numbers. Yeah, they're really on point. Actually, for some of the mainstream media, they're 2 or 3 months ahead. if more, not more than that. The coverage there is excellent. That is legitimately really good news. They do a really good job of presenting the information. I mean, that's what I meant. The news itself is not good. That China's having more coronavirus outbreaks in other cities outside Wuhan. That's not good news. But the coverage is excellent. Okay, Dimitri, thank you for the super chat. Am I trying to bring the VIX below 20? No, I don't want the VIX below 20. What's my view of the VIX in the short term in July until November? I think the VIX is going to be in a trading range. I haven't looked at a chart, but I think it's higher lows. So I would say the VIX is going to be in a trading range probably from like 35 or 40. I'd have to look at a chart more. Maybe this is a technical analysis chart I could do for patrons. But it's going to be from like 35 to maybe 55 or 60. So I think the VIX is going to stay around there. It's going to be range bound. There's going to be chop, up and down, up and down, up and down. Because if you look at charts of past bear market rallies, there is a lot of volatility. Now, I think with the interventions the other central banks and the Fed have done, that I don't know if the VIX is going to end up going back to Lehman Brothers levels, above Lehman Brothers levels or above Lehman Brothers levels, but maybe. It would depend how bad things get. Because the VIX did last month, I think, it did get above Lehman Brothers levels. I did an interview with hedge fund manager Kevin Duffy, over 30 years experience, professional investing, trading markets, also very good professional short seller. I did an interview with him. It is not out yet. I have to edit it. So I did that with him yesterday, and we actually did talk about the VIX. So that will be out hopefully in the next day or two. I just have to edit it. But I'm really liking the Zoom Pro, the audio quality. It was a good investment to upgrade to Zoom Pro for my audio interviews. Thank you, Stephen, for the super chat. I appreciate it. Yeah, so JB, with global gold demand, I think demand for gold in the US, demand for gold in Europe is exploding. I'm getting emails from listeners in Europe telling me about the premiums for physical gold coins in Sweden, how they're even larger than here in the US. The demand for physical gold outside of China and emerging markets is enormous in the developed countries because people are starting to wake up. I have not heard any stories lately about demand for gold in Japan, but I imagine that may pick up too. Oh, okay. Also, I just remembered this. So also with China in Focus, there is a really good documentary by investigative journalist Joshua Phillip. It was released a couple days ago. He has been covering China for a decade, I think. It's really good. It's about 55 minutes long. It's available for free on the YouTube channel China in Focus. So that came out a few days ago. You can find it there. And I may link to that at the end of this short little video. And then Steve Bannon's new movie about Huawei, where the names are changed, but it's still really good. That just came out for free too on the YouTube channel China in Focus as well in the last week or so. So that, I think it came out last Sunday, so that's really good as well. Those are must watches, both of them. But this YouTube channel, I just found this China in Focus. It's really, really good because I've been watching China Uncensored, ADV China, Huawei 86, Serpensa, and then speaking to a bunch of other China sources. I also get a hedge fund quality China newsletter from my friend Jeffrey Landsberg at Commodore Research as well. And then I have some sources inside China, like my friend in Wuhan, who is now worried that there's going to be a second outbreak. Okay, super chat from Stephen Crawford. Thank you for the super chat. Do I think the OPEC deal will be enough to keep oil above $20 a barrel for the next several months? What are the odds the cartel will actually cut the whole amount versus cheat widely? Excellent question. I think there will be a lot of cheating because that is the history of OPEC. You seem aware of that with your question. So the odds are not in favor of them abiding by the agreement. Mexico didn't even want to be part of the agreement. It seems Mexico was leveraged into this. There's a lot of tweets going out by Eric Townsend of Macro Voices and Shy Girl and a few other oil experts that Mexico wanted none of the oil cuts. Pemex actually put in some really good hedge bets. They bought puts on the oil price months ago, and they made billions and billions of dollars. So Mexico's budget, even though Mexico's currency is getting destroyed, Mexico's budget is actually funded, I think, because Pemex did hedge the oil price and bought puts months ago. So I think Mexico's government budget is actually funded. Okay, now the other part of your question. Do I think the OPEC deal will be enough to keep oil above $20 a barrel for the next several months? No, but you have to watch demand. So what I would watch, Stephen, is you watch the rig count. I explained this in the article behind my Patreon account paywall. So I wrote an extensive oil article about the signs we'll see oil bottom. I disagreed with Grant Williams about his oil call. I respect Grant Williams a lot. I respectfully disagree. That oil is bottomed for a number of different reasons. We need to see more bankruptcies. We need to see more consolidation. We need to see the rig count fall more. We need to see the refiners cut how much gasoline and other oil products they're making. And then finally, we need to see a lot of these oil producers either cut production or go bankrupt. But you can watch the rig count. We did see this week, there's a story on oilprice.com, which is the best free resource. There was an extensive article on the rig count. So that is good. The rig count is falling. It needs to fall more. It can't just be 1 week or 2 weeks of falling rig count. You need to see a larger trend in place, as I explained in the Patreon article behind the paywall, in my opinion. So as of right now, I would say no. The $20 per barrel will not hold. That would be my opinion. As of right now, I do not expect that to hold. Hope that answers your question pretty well. So it looks like Japan and the US are planning to get their manufacturers out of China. I've also heard from other sources that some more affluent Chinese manufacturers want out of China too. So if President Trump were to make it easier for these Chinese manufacturers to, let's say, open up a factory in Nevada in a year or 18 months or under 2 years, a lot of Chinese factory owners would jump at the chance to get American citizenship and to move their factory to Nevada. I've heard that from one or two other sources in the Las Vegas area, because they've been sending out feelers. That's what I've heard. Now, not every city and state is manufacturing friendly. The rules and regulations and taxes for some cities and states is very, very difficult. We may see some of these states start to lack that, though, to get more investment in factories back. Okay, excellent super chat question here from JB. Will Sandstorm Gold ever have a dividend? Last earnings call, they said it's the board of directors call and didn't give an answer. Thoughts? It is too early in the company's life cycle for them to pay a dividend right now. I've gotten in arguments with people like David McIlvaney who say that Sandstorm Gold should be paying a dividend. There's other people who call me a lot of really nasty names in the Seeking Alpha message boards for Sandstorm Gold not paying a dividend. If a company is not mature enough, a growth company, and it's too early and they pay a dividend, the company could get in trouble. So share buybacks with free cash flow are strategic. The share buyback plan was put in place in case of a stock market crash. And because the shares would never, at one point a couple years ago, the shares would never go above $4 a share, regardless of the new deals that were announced or the cash flow assets that came online. So it is too early, JB, in the Sandstorm Gold Company life cycle for them to pay a dividend yet. I suspect they will start to pay dividend as more assets come online generating cash flow. So you have to understand the life cycle of a company, the maturity of a company. You don't want a tiny little company that's growing revenues, growing free cash flow to start to constrain itself by paying out a dividend. And this is the mistake that most investors make because they're not familiar with running a company. Okay, you do not want to constrain the cash flow. So it's too early for Sandstorm Gold to start paying out a dividend yet, even a small token one. That's my opinion. Now, maybe the board of directors will change their minds, but I think they should wait. I think they should wait probably until Hot Maden in Turkey, or Agua Rica in Argentina, or some of the other larger assets are online generating cash flow. And maybe they do another deal in the next 6 months or a year when the economy starts to restart, because there's a lot of copper miners that need cash. So there will be a lot of good deals for gold or silver byproduct streams available. If you read the new Nolan Watson Kitco article that I well, first of all, it's on Kitco's website for free, but then I did some other analysis in there behind the Patreon account paywall. But if you read that, it sounds like the copper miners are in big trouble and will need to immediately, some of them will need to immediately sell gold or silver byproduct streams as soon as things get a little better. So yes, I would love Sandstorm Gold to pay a dividend, but not yet. They need to wait. They need more assets online generating cash flow. They need more diversification of cash flow. They need their growth pipeline to mature a little bit more, and then they could pay a dividend. Because if you start a dividend and then you cut a dividend, you end up like Osisko Gold Royalty, where you have bad deals and then you cut the dividend and then the shares crash. Osisko Gold Royalty, the shares crashed. Osisko Gold Royalty was paying out too high a dividend. There were bad deals, problems with their some of their investments, and then the shares crashed. And then all the gold and silver stock newsletter writers all write how Osisko Gold Royalty is still a better company than Sandstorm Gold. Despite how Osisko was written off, I think it's almost $1 billion in bad deals, and they've cut their dividend. A bunch of other problems. But some newsletter writers say Osisko Gold Royalty is still better. Oh yes, please click or tap the like button. So it is too early for Sandstorm Gold to be paying out a dividend. Let's get some more assets online generating cash flow, and then we'll talk. I know everyone wants income too early. If they pay out the dividend too early and there's problems, then they have to cut it and then the shares crash. The maturity or life cycle of a company, anyone who's saying that a small company that's still growing rapidly should pay a dividend immediately doesn't understand the maturity and life cycle of a company. Because a small company that's focused on growth needs that cash flow. They need flexibility. And committing to a dividend means less deals, less growth. I'm patient, I can wait. Even though I sound like I'm 25 years old, I'm still not that old. I sound like I'm 25, but I'm closer to 40. Okay, well, that's it for tonight's show. I want to thank everyone for listening. Thank you very much to my Patreon account contributors. I think there's over 700 now. It's growing very rapidly. It's only $5 a month. I think I charge by far the cheapest of anyone out there for the quality of content. There's a lot of newsletters that are $400 a year or more that don't have anywhere near the content that I have. So you can take a look behind the paywall. I don't think your credit card or debit card will get charged until either the end of April or the first week of May. So you would have a free trial to take a look behind the paywall there for a while right now, because people were already billed for April, and it's going to be at least a couple weeks until they get billed for May. Also, thank you very much to my monthly PayPal contributors, and people throw me a tip once in a while.